Hello and welcome to Martyn Lucas Investor. The day has come. Powell's final Jackson Hole speech. I'm expecting no rate cut in this event. I'm expecting potentially no rate cuts in September. This could be the beginning of the end. This could be the beginning of the bear market. This could start signaling where we're going. The S&P 500 is severely overvalued. Bitcoin has put in a double top. XRP has put in a double top. We are now seeing the markets wake up to the idea of potentially no rate cut in September. Still overwhelmingly in favor of a rate cut, overwhelmingly expecting a rate cut. But unfortunately, the reality is inflation has come up. PPI data a few weeks ago was severely concerning. We are expecting it to possibly come into CPI, but unemployment data is also bad. This puts a real spanner in the works for the Fed because you do not want unemployment going up and inflation going up. Inflation, in my opinion, is a bigger concern than unemployment at the moment, and for that reason I believe the rates might not even be cut in September. But what we're going to do is get ready for Powell's final Jackson Hole speech. It will be coming up live on this show. We'll be covering it all. We'll be getting prepared. I'll be giving you my argument within the stream, but let's see if we can navigate the markets together and hopefully still come out on top. Thank you everyone for tuning in. This is the morning forecast show. Please do hit that like button, subscribe if you haven't done so already. But we are now witnessing Bitcoin coming down 0.2%, but actually the broader altcoin market is actually also being affected a bit more than Bitcoin itself. We've got XRP now putting in the lows of its day. Currently sat at $2.81. That could be coming down to the bottom of our range of $2.62. That could be another 6 to 7% correction. I'm just making sure we are all not negative but realistic. Look, I'm not trying to be negative. I'm fully invested. I am fully invested in the cryptocurrency markets. I'm heavy on XRP. I'm heavy with my investments. However, we do need to be realistic about the outcome. I'm not going to come here and just say what gets views. I'm not just going to come out here and say exactly what everyone wants to hear. What would be the point in that? None of us would be prepared for different scenarios. I will go through every single scenario. I do not have the answer. I do not have the answer whether this is the end of the bull market or not. I am still hopeful, and I will go through the probabilities again. We did go through them yesterday, but I'll go through them again today of the probabilities that this isn't the end and the other outcomes that could be ahead. However, I think the market has been pricing this in as a best case scenario. The market's pricing in September rate cuts. The market's pricing in Jerome Powell coming out and not saying anything too dovish. The market's pricing out that pricing in that Jerome Powell's not going to come in and start saying we need to lower rates. So I do think we are overpriced in the assets. The S&P 500 is at significant levels. It's in sort of the 95th percentile of overvaluation. So there is a few concerns out there, and we're sort of pricing in the best case scenario. However, what we've now started to see on the Fed Watch tool and interest rates decision is slowly but surely we were at 100% chance of a rate cut in September. There was even a 50 basis point rate cut probability on the Fed Watch tool. However, now it's completely shifted. We're now 70% likely for a rate cut and actually 30% likely to hold rates where they are. So you can see the momentum is shifting. The crypto market is normally first to react, and this is giving us an indication of what the stock market can do. The crypto market is now down and it's making the lows of its day going into that Jackson Hole event. We've got XRP down 1.5%. We've got Ethereum reacting to this now as well. Ethereum was up quite a lot this morning. However, in the last half an hour or so, last couple hours, it's been coming down. The US market, I believe, is still green on the day. Last I checked 15 minutes ago, it is, but now it's also selling off. But what we're going to do is do a full analysis. Will I be shorting today? I am already short. I am already short on XRP and Ethereum. But remember, I'm a high-risk investor. That doesn't mean you should go in short. I'm ready to lose all the money I've put into that short. But it's sort of a hedge for my portfolio because I'm very much long on my portfolio. I'm very much in the market. So I do have a couple short positions, but I'll be monitoring the speech, how it goes. I might close them. I might be out of the money. I'll probably lose on those trades potentially. So I'm not worried about that, but I do want that sense of protection with those short positions on Ethereum and XRP. My take profit on XRP is around $2.70. My take profit on Ethereum, I think, is around not too far down, maybe 3 or 4% down. So I am prepared with a short, but that doesn't mean I'm expecting the markets to 100% go down. I am expecting the markets to sell off today. Yes, I am. And I am short right now. But let me go into all the news of the day. So we did just put out a newsletter. Sensei's morning forecast. Remember, you get this every day in your inbox. All the top stories, all the deep dives. And today is Powell's final speech. So what does that mean? Well, we'll get into it. Remember the top stories, you can get them at a glance now. That's a new thing we've put into newsletter. We've got the bullish stablecoin IPO, the digital euro shift, the Putin's peace terms. We've got Nvidia China pivot, Microsoft AI warning, and Jackson Hole spotlight. So let me go straight to that Jackson Hole news story, because I imagine that's what the majority of the people here are interested in, and rightly so, because that is an event that it has been hyped up a lot. It's its final one, and it's going to affect the markets a lot, and we're covering it live on the show. If you have just tuned in, make sure you hit the like button, make sure you are subscribing. What a day it's going to be today. It's going to be a volatile one for them, a volatile day ahead. So, Federal Reserve Chair Jerome Powell takes the podium at Jackson Hole today for what will almost certainly be his final keynote address at the central bank's most prestigious gathering. As his term expires in May 2026 with no reappointment from Trump, Powell faces a defining moment that could cement his legacy while addressing the Fed's most challenging policy dilemma in years. Whether you're pro Jerome Powell, you love him, whether you hate him, whether you think it's political, the interesting thing will be, is he going to try and make a big statement here? Is he going to try and throw one back at Donald Trump? Is he going to try and leave some sort of legacy? Is he going to do something strange at this at this speech, something to make a mark? We don't know. It can happen, and that will be an interesting one to watch, and we will be watching it. But let's get into the details of it. So the Jackson Hole tradition, why markets are hold their breath. The Kansas City Fed annual symposium in Wyoming has become the premier venue for monetary policy shifts. Powell's previous Jackson Hole speeches have telegraphed major pivots. From his 2020 inflation framework overhaul to last year's declaration that the time has come for policy to adjust, which triggered a market rally. Markets treat these addresses as policy roadmaps, making today's speech a crucial inflection point for asset prices and Fed expectations. This is why this is highly anticipated. Will you be sure? Let me just make sure I'm up to date on this. I think you've asked the same question again. Will I be shorting today? I'm already short. What time is the meeting? 9 hours 15, I think. No, the meeting is coming up shortly, actually. In the next few hours, the meeting will be live, but we need to prepare beforehand, and that's what we're doing right now. I'll give you all my thoughts, but once we read all of this, I'll give you my thoughts on what I'm going to be doing. But yes, I am short right now. 10 a.m. Eastern time for Powell's speech, yes, but there is going to be a build up to that, and the markets will be volatile before. So yes, that is, I believe, the time Powell will be officially speaking. There will be a few things going on before. That's why we're going to be live before, and that's why we're doing the build up right now, so we're all prepared for it. There's no point just going blind into the speech, not knowing what you should be hearing, not knowing what certain things he says will move the market, not knowing how to protect yourself. So that's what we're doing now. It's never good going blind into a speech. Most people, if you just go blind into the speech, you have no idea if what he's saying is good or bad. You'll just make uninformed decisions. So that's what we're trying to do in this live. And then in a couple hours time, we'll be going live to Jerome Powell. So it's all going to be on the show, so you won't miss a single thing. Please do try and get the likes up. We've got about 500 people watching. We should be about 300 likes. So let's see if we can do that. We are nearly at 100,000 subscribers as well. So please do subscribe. If you do join us before 100,000, we are going to give lots of things away. We're giving away merch. We're giving away vouchers. We're giving away coins. We're giving away $1,000 worth of XRP. We're doing a celebration event as well. So lots of things. We're coming up to 100,000 subscribers. So all you have to do is press one button, subscribe. I'll give you the link to the $1,000 giveaway as well in a second. Can you go over the Spark token? Thank you very much. Excuse me. The King's coming. Can you go over the Spark token? Unfortunately, I don't have time to do that right now. We've got something much more important ahead of us, which is the Jackson Hole speech. If you do a super chat, we could possibly have a look at it at the end. Love this show. Thank you very much. Good news coming from JP. What time zone? What do you mean what time zone? It will be in the next few hours. Good morning, Sensei. Good morning to you too. Okay, so this is the annual event, and the most important thing is every single time he's gone out there has been some big policy shifts. This isn't an FOMC meeting. However, it can be treated like an FOMC meeting. This is not a meeting where they come and say there's been a rate cut, we're holding rates. That's happening in September, and the exact day that's happening will be September the 17th. This is sort of a speech he does every year, and they have actually been more influential than some FOMC meetings, because in 2020, was a major pivot, and that was the time has come for policy to adjust. From its 2020 framework, 2020 is when they weren't increasing rates. Rates were very low. They're bringing rates down. And then just this time last year, when he came out, he actually said it's time for policies to adjust. That was the Fed pivot. That was from when we went from rate hikes to pause to come down. This time last year, he made the announcement at Jackson Hole to pivot. And we are sort of expecting some sort of announcement today. Although I don't know if it's likely he'll make the announcement today or not. I'm sure in his wording we can find out what he's going to do. But because it's his last one, I'm not sure if he's going to make a mark or if he doesn't want to make a mark. But we'll certainly find out a lot more about what he thinks about the recent data and how and if we can interpret that he's going to be cutting rates. So, the September rate cut expectation, a moving target. Market probabilities for September rate cuts have undergone dramatic recalibration. The markets are all over the place. The markets themselves are fairly up, not really phased by this still, down a couple percent maybe. But behind the scenes, there is absolute turmoil going on. People do not know how to price this in. They don't know. There's so much uncertainty. They don't know if there's going to be rate cuts, 50 basis point rate cuts, rate hikes, or holding rates. In the last couple weeks, we've seen probabilities for rate cuts go all over the place. There was a probability that there was a 50 basis point rate cut. That's effectively, you could call that a double rate cut. Instead of just cutting 25 basis points, there was a couple weeks ago a probability building that there was a 50 basis point rate cut. Then there was a probability of a 25% rate cut. There was literally a 100% chance we were going to get a rate cut a couple weeks ago, or even just a week ago. Now what we're looking at is a lower and lower chance of a rate cut happening in September. Still a 71%. That was an image taken literally less than an hour ago, and now it's even lower. It was at 71%, 79% yesterday, 71% today, 69% just a few minutes ago, and what is rising it's not a 50 basis point rate cut, a holding of rates, which was not expecting. So market probabilities for a September rate cut have undergone dramatic recalibration from a near certainty at 99.9%. There was an 100% chance of rate cut in early August. Expectations have cooled to roughly 70% as of today. The decline stems from multiple factors. PPI, inflation surging at the fastest pace in 3 years. Remember, we covered that live on the show. That's when I went into that 50x short position, which obviously I said, do not follow me. This is very high risk stuff I'm doing. Thankfully, I came out on top because that data was so bad. I was actually hoping to go long. I was hoping PPI. I was very hopeful that day that PPI was going to come in cooler than expected, and then we will go into that full-blown altcoin season, the end of the bull market, and have a few more months of dramatic upside before a correction. But PPI put an end to all of that, and I was really disappointed. But I did have to act on that, and I went short. Anyway, that's what happened, and we covered live on the show. So make sure you are subscribed so you catch all of these events. But that was a terrible PPI. And remember, what is PPI? Well, it's the producer price inflation. It's sort of upstream what's going on. What are the companies and the producers' inflation? Because that, at the end of the day, they either absorb that cost and taken away from their own margins, or they pass it on to the consumers, and that's us. Do we, or not me, because I'm not in the US, but the consumers, will they have to take the hits? So PPI inflation surging at the fastest pace in 3 years. That's really concerning, because that's when people look at it and say, okay, maybe CPI will go up, maybe inflation will go up, maybe rate cuts won't happen. And core consumer inflation accelerating to 3.1%. We're getting further away from that 2% target. And Fed officials like Kansas City's Jeffrey Schmid emphasized the central bank isn't rushing to cut rates. Markets initially positioned for aggressive easing after July's weak job report, which showed only 73,000 job payroll additions versus 110,000 expected. Things are getting bad now. And the way I'll explain this is jobs data came out and it was revised, and it looked pretty bad. We looked at it and said, and obviously the markets looked at it the same way, unemployment is going up. Not that many jobs are being added now. The Fed has gone too far. They haven't cut rates. And then a couple of weeks later, we got the news that inflation is going up. The Fed's done the right thing for not cutting rates. So things are getting heated now. Inflation's going up. Unemployment's going up. Which one is worse? That's the question you need to ask yourself. Is it more important to keep, or has unemployment gone up too much? Or does it look like it's going up too much? Or is inflation the bigger problem? In my opinion, inflation is the bigger problem right now. We very, whether you like Trump or you don't like Trump, I'm not here to be political, but Trump's tariffs have caused the inflation spike we just saw on PPI. The question now is that going to come into CPI? Is it a one-time hit? That's the question that everyone wants the answer to. But anyway, what is the big concern right now? Is it inflation that is sort of heading back up or being very sticky, or unemployment, which is now signaling that the jobs data is quite bad because unemployment's going up and not many jobs are being added to the market? So which one do you think is worse? Because that's the $1 million question. If you think the jobs data is more concerning, then, and if the Fed thinks the jobs data is more concerning, then they will cut rates. They'll bring rates down to protect that. If they think the jobs market is pretty resilient and around 4.1% unemployment is fine and they can deal with it and it's not the bigger problem, and on the other hand inflation is getting a bit too sticky and actually going up, then they will hold rates where they are. In my opinion, they're going to go for option number 2. Why? Well, because unemployment is still at historically low levels. We are getting signals flashing that it might start going up or accelerating, but we're not there yet. What we have in our face right now is PPI, massive shock. It was about like 0.8% higher than expected, and that's a lot for PPI. We've got inflation being sticky, inflation potentially accelerating. We don't know what's going to happen in the future with tariffs running through. So I would say that the bigger issue right now that the Fed needs to concentrate on is inflation. And if Jerome Powell agrees with me, if Jerome Powell has that same stance, then he'll probably give some insight that they're going to be looking at the data for CPI and PPI coming out in a couple of weeks before their FOMC meeting. He will say we're data driven, we need to look at the data. And that effectively means if CPI still looks as bad as it is, and PPI it wasn't just a one-time hit, we're going to keep rates where they are, and we might not even see a rate cut in 2025. And that, in my opinion, will cause a market correction. That's why I'm sort of short on the market, because that is a scenario that I think can unfold. Whether it's as simple as him saying we are going to have we're not going to have rate cuts because we don't know about because PPI was pretty bad, or the jobs market looks is fine where it is right now, it's not that concerning. If he says that, then I think the markets will come down. But we need to see what his tone is like. So that's why I'm going to continue with this story so we get some more information. And it's all about the tone. So the hawkish versus dovish tightrope. And right now in the chat, I'm going to be asking you the same question. It's already a poll. And this is the question that you need to ask yourself. Will Jerome Powell have a dovish or hawkish tone? And I've explained to you exactly, and it's a 50-50 right now in the chat. There's a 50-50 right now in the chat. I don't think I've ever seen this before. And I've explained to you what I mean in the chat. So if I go over here, will Jerome Powell have a hawkish or dovish tone? Dovish supports a lower rate. Will he support lower rates? Is he going to signal to us there's going to be rate cuts? 51% of you say yes. Hawkish, we're going to keep interest rates high. We're not looking to reduce interest rates. 49% of you say that. And effectively, if he's dovish, if he suggests we're going to bring rates down, then the markets will probably go up. If he's hawkish and he says we need to keep interest rates where they are now, the markets will probably go down. Make your decision. You make your decision in the chat. And that's effectively whatever you believe is sort of how you're going to position your portfolio. Or if you're just a long-term investor, which most people will be better off being, and not trying to day trade and just investing in the long term. You see dips, you buy dips. When you inherit money, or if you get money, you just put it in the market. If you're in a job, you just buy the market, a global index or whatever. You don't care about the day to day. This show is probably not for you. You just need to invest. Well, it might be entertaining. You might have a little bit of money on the side to trade. But if you're investing in the long term, this event doesn't even matter. What happens this year doesn't matter. What happens next year doesn't matter. If we get a 50% correction, doesn't matter, because you're looking at the long term. And that's probably the way that most people should invest. But if you've got a little bit of a trading money, you want to play around with it, or you're actively managing your own portfolio, then we're here to provide you some information, but certainly not to give you financial advice. And I do want to make that clear. Please do not follow my trades. Please do not go short because I'm short. Please do not buy or sell based off anything I say. I'm not a financial advisor. I'm not an economist. I'm just here showing you my journey, bringing you the newsletter, and hopefully giving you some value for your time. But let's go. Let's just answer a few questions and we'll go back into it. Sensei, will crypto fall with the market or will it go against it? Jenny B, I think crypto will lead the drop, and I think that's already started. If we're looking at the markets, I think the crypto market started selling off before the US markets have sold off. The US markets are still up on the day. What we're now seeing on the crypto markets is a more volatility towards the downside. So I think the crypto markets will front run. I mean, look at XRP right now. It's just down. I'm in profit with my short. Am I happy about that? Slightly, but not really, because most of my money is invested in the market. So just because I'm short doesn't mean I'm going against everyone or anything like that. I'm just trying to protect my position by hedging with a short, because there could be a lot of downside volatility today. Anyway, I think the crypto market, and I don't mind if this suddenly spikes towards the upside and he says we're going to have cut rates, I'll be very happy. I don't care if I lose the money I put in the short position at all. Obviously, it's a bit annoying, but I don't mind. I'd rather the market go up. You can see XRP now putting in lows of the day, severely coming down now. So I think the crypto market, not only will it fall with the market, I think it will front run the market. I think what we're seeing right now is the crypto market front running what the stock market might do, and we've seen that a few times before. And right now XRP is at its lows of the day. Too late to cut the rates. Unfortunately, I mean, if you're purely looking at the data, that statement is false. But if you're looking at the data and if you believe the data, that's a whole nother story. Jerome Powell has done the right thing. No one expected inflation to come back up. No one expected inflation to be so sticky. And if he brought rate cuts down, what the question, and if rates were down, I don't know, 25, 50, 100 basis points from where they were now, if we were getting a rate cut every few months, the issue would be a much worse situation, because what the Fed would be deciding today would be, do we pivot and bring rates back up, interest rates back up, and then that would cause a lot of uncertainty. Companies will start going bankrupt. People that refinance their mortgages won't be very happy. All this sort of stuff. There would be much more chaos in the market today if, now that we're seeing inflation going up, instead of just holding rates where they are, the Fed would come out and say we might need to start hiking rates. So the data we've got suggests that the rates should be not really coming down that much, maybe 25 basis points either this month, next month, but really slowing down the rate of rate cuts because inflation is quite sticky. The only time to bring rate cuts down or suggest bring rate cuts down if we start seeing some real weakness in the jobs market, and we're slightly starting to see that, but not enough in my opinion for them to start having emergency rate cuts or anything like that. Coinbase will freeze today. Thank you, Josh. Yes, always be prepared. Have your limit orders and plan and stuff like that. That happened a lot in 2020. I haven't really witnessed it happen or haven't heard about it happen in this bull market, really. Good morning, everyone. Okay, let me go back to all the information we're giving you. Too much traffic with Powell speaking. Only freezes if servers fill, but not very long. Sell-off day gives a great opportunity for this weekend. I'm finding on the trading on the last 3 weekends being profitable till 3 a.m. Monday Eastern. Thank you for sharing that with us. Okay, 3 weeks in a row. I'm just going to go back to XRP $2.50. My target is firstly $2.70. For something like that. That's where my short position, I think I'm taking most of my profits, if I remember correctly. And then the main target for me, which I've always said, in the month of August is a big range between $3.40 and $2.62. And it looks like we're heading towards the bottom of that range. We've done the top of the range. Now it looks like we're heading to the bottom of that range, potentially. Again, all depends on what Jerome Powell says. I don't have 100% certainty that it's going to be all bearish. There could be certainly bullish things he says. And that's why we're going to go back into this newsletter that was released today to give you some more information. So, Powell, the hawkish versus dovish tightrope. Powell confronts an unprecedented balancing act between inflation control and employment support. Core inflation running well above target argues for restraint, while labour market degradation with a downward revisions of 258,000 jobs in May and June supports easing. That's the only thing. That's the only reason the Fed will cut rates at this point. Inflation isn't good, but however, we had 258,000 worth of jobs revised to the downwards expectations. So there was much less jobs created than we first anticipated. 3 scenarios emerged for Powell's tone. And this is what the markets will look at. This is why the markets will react. And this is sort of the question I've posed to you in the chat. So make sure you are voting on that poll. We are slightly favouring supporting lower rates at dovish tone now, 52% of you. So there is 3 scenarios that emerge for Powell's tone. A dovish pivot, emphasising labour market fragility to validate cut expectation. If we start hearing him talk about, I remember I'm trying to make it very clear for you so you know exactly what to listen out for when the speech starts. If we start hearing him talk about the labour market is looking weak, the labour market is fragile, jobs data is concerning, we need to keep an eye on jobs data because there's not enough jobs being created or unemployment's going up. If we start hearing him talk about jobs data in a bearish way by saying it's concerning this, that, and the other, any tone like that, what that signals to me and what that will signal to the market is he's worried about jobs data. If we see him speak anything about being worried about the jobs data in any way, if he starts talking about it too much or start saying it's a bit concerning, then me as an investor and most people around the world, especially the hedge funds and people that really control the market and Wall Street, will look at that and say, he's concerned about jobs data. That means, and he's putting a lot of weight and a lot of his speech time about the labour market. And what that would signal to the market is he's concerned about it. That means he's going to cut rates. This is a big concern for him. And if he wants to control that concern, and if he is seriously concerned about that, then there's only one option: cut rates, cut rates, cut rates. And that would say to the market, he's going to start cutting rates. We're going to take that as a bullish signal, and we're going to start buying up the market. So if you start seeing that dovish pivot, anything about the labour market, fragility, then what you're expecting to see in the market is a pump. Another tone that we can hear from Powell would be a hawkish stance, highlighting tariff-driven inflation and wholesale price risk. If he really starts talking about tariff-driven inflation, if he really starts emphasizing that we are worried inflation is going to go back up, or we really need to see what PPI and CPI is next month. PPI was a real concern. What we saw, inflation is still our main priority. We need to keep it at restrictive rates. If he starts really going on about inflation, the other problem at hand, and he's concerned about inflation, and he spends more time talking about inflation and highlights and goes on about, we don't know what the tariff inflation will look like. Tariff inflation is starting to come through now. We need to see a couple more months of this. Then what you're looking at there is the decision in September, most likely after. Remember that there is two other data points we need to look at, which is PPI and CPI, which comes out the week before the FOMC meeting in September. And that can have an effect on everything. But if we're just taking today's speech, and we see him talk a lot about tariff and driven inflation and PPI and all that sort of stuff, that is a hawkish stance. And what we're expecting there is keep interest rates higher for longer, and we won't be expecting a rate cut, and that's when we'll see a significant market correction, in my opinion. And then there's option 3, which may be the most likely option, where it's the strategic ambiguity. And we've seen this from Powell time and time before. However, maybe it won't be the same this time around, because it's a Jackson Hole speech, and he likes to make some announcements there, and it's his last one. And the final tone will be strategic ambiguity, stressing data dependence to preserve flexibility. If he literally gives us no clue, if the whole speech is about, we need to be data dependent, we're going to be data dependent, we'll see what CPI is and PPI is going to be next week, we will keep the rates here until we see more data, or maybe not even that. That's probably a bit more hawkish. But if he just doesn't give anything away, and he just keeps talking about data dependence and starts talking about the independence of the Fed and stuff like that, then that's just ambiguity. The market will do what it wants to do. We probably sideways. That's a scenario. So if he just doesn't give anything away, and he just keeps going on about data dependence, that's really neither hawkish or dovish, and that's it. So obviously the market implications, if he is dovish, if he emphasizes the labor market fragility, that will boost growth stocks, tech stocks, utilities, REITs, bond yields would fall, and all that sort of stuff. If he's hawkish, if he keeps talking about inflation and how inflation needs to be kept under control, let me make sure this is just disconnected, so I'm just going to refresh that and make sure we are we all okay? Are we all live? Or good? We're all good in the chat. I just saw this reconnect. I think we're all good. We're okay. So if he's hawkish, so if he keeps talking about inflation, he's worried about inflation data, and he's concerned about tariff-driven inflation, we will expect defensive stocks to go up, and growth stocks and risk-on assets will probably have a correction, at least on the day. This doesn't mean it's the end of the bull market. It just means we will probably see a correction on the day, and what we'll probably see is this chart over here, which signifies to us if there's going to be a rate cut or not, really start favouring a holding in rates rather than a rate cut. That's if we see something hawkish. Neutral, we'll have mixed reactions, we'll have some volatility. We don't really know what that will look like if he just talks about data-driven, and gives nothing away. He'll probably talk about data-driven. He's definitely going to mention that he's going to be data-driven, but what we're looking for is elements, whether it's a more hawkish speech or more dovish speech. And here we go. We'll go on to the next section right now. Remember, this is taken from our very own newsletter. This is in the deeper dive. Yesterday, we covered everything about the FOMC minutes, and that gave us an insight. Remember, every single day we have a deeper dive, whether it's a specific stock we're looking at, end phase, bullish, IPOs, Circle, Ripple, ETFs, a lot in the deep dives where we do hours of research for you guys every single day. I mean, if you just read the deep dives every single day, you're going to learn so much about the markets. But not only do you get the deep dives and one big piece of news, you get all of this. You get all of the today's key story summary. You get a quick outlook of the one big thing, the money move of the day, the market snapshot. Then you go into your 5 things you need to know. And if you are investing in the markets, whether it's the stock market, the crypto market, you're looking at macros, you're looking at bonds, you just want to be, your job entails you to look at the financial markets, you just want to start learning a bit more, well, this newsletter's for you, because you get the 5 things you need to know every day. The 5 things you need to know every day. That's all of these stories here. We've actually got Martyn calling in, so I'll bring him in 30 seconds. You've got all the stories that you need to know. So if you're investing in the markets and you want the stories that are tailored to you, the viewers, and it's not all the fake news you see on X, it's not all the fake news you see in other newsletters, this is real news for you guys. 5 top things you need to know every single day. You get the deep dive story. You also get the economic calendar to see what events are coming up, whether it's the PPI where we traded live, whether it's CPI, whether it's speeches, and you get the chart of the day. Today's chart of the day is XRP, and you'll know exactly what I'm doing with my XRP trade. So I'm going to give you that link in the live chat. It is the first link in the description. So do go and check it out. What I'm going to do is bring Martyn live on the show. He is suited and booted, ready for this. So let me bring Martyn live on the show. Welcome into the show, Martyn.
Thank you very much, Sensei. If you could make me full screen just for a moment, that would be fantastic. We've got a big day lined up for you. You cannot afford to miss it. We've got, of course, Jerome Powell live on the show. He's only actually expected
unfortunately, I can't, Martyn. Sorry, just because my scene is not set up.
Okay, no worries, mate. Not at all. I'll show everybody later then. This morning on the show, Jerome Powell is only expected to speak for 15-20 minutes, but it could be a very, very powerful speech. Just so you know, overnight, I've gone all in on XRP. I'm now $445,000 invested, nearly $500,000 now, and fully invested. All my margin, all my cash, all my positions, because I like XRP. I like where it's going in September, October. So I'm buying these dips. You can sell them off because it's uncertainty. That's the only reason why it's going down, uncertainty. So I'm buying. I'm also buying some more Walmart. I'm also buying more S&P 500. So we've got a big day lined up for you. Straight after Sensei's show, I'll be live with the live Jackson Hole build up and then the speech itself. I will then do about 15 minutes of analysis after the speech, and then I will hand you back to Sensei, who will provide you all the charts so you can trade the positions, so you know how best to trade the positions that you're going to see play out once Jerome Powell does his willing on the markets. Straight after that, we have a premiere coming out. JP Morgan overnight have said 50% up on some of our favorite EV tolls. So we have a special on Lilium that Vaz has just recorded. We think this is a very nice play, especially with all the volatility in the market, with new innovative sectors preparing to explode. So right after I go live, Sensei will take over with the charts. Then there'll be a premiere of something you really want to watch with Vaz, which is, of course, our Lilium EV sector. We're going to look at that. And then right after that, it will take you into the closing bell on the music channel, which will automatically link. All the links will be provided in each event to our XRP Ladies Night. We have over 30% now. Ladies watch the show, and that's very, very important, particularly in the crypto space. Most crypto channels only have 1%. We have now over 30%, and maybe soon our very first female broadcaster who wants to talk about crypto exclusively. So all that coming up for those of you that are friends and family of the channel. You'll also be excited to know that it's actually a birthday of one of our members and also a 50th anniversary as well for Jerry and Elba. So it's a great night planned for you. I hope you'll join us for the whole day. I'm now going to hand you back to Sensei. When you join me this morning, you'll notice some upgrades. Sensei got some upgrades? So I got some upgrades. I'll see you back in a bit.
Before you go, Martyn, just one question. How much did you say you've got invested now?
$445,000.
Wow. Now that's conviction. Just wanted to make sure I heard that right.
Yeah, absolutely. An insane amount of margin, nearly $250,000. Shh. Keep that quiet. But we're fully invested. At the end of the day, I buy with conviction. I don't buy on emotion. And when the markets sell off and give me a gift, I'll buy them as long as the fundamentals haven't changed, and they haven't. Because what's changed for crypto? What's Jerome Powell doing that's going to damage crypto? Yeah, there'll be some sentiment. People will sell off because of fear. Well, if you had fear, why did you buy it in the first place? Right? So I bought it and see what happens. Hopefully I'll be here to tell the tale tomorrow, right? Sensei, hand it back to you. Cheers, mate. Can you go another 15 minutes or so after you finish normal time?
Yeah, that'll be fine. Yeah.
Perfect, because I'm still preparing a few things. Thank you very much. I'll see you in a bit. I'll let you know in Discord. Cheers, mate. Bye-bye.
Thank you, Martyn. Wow. Well, you heard it first here. Martyn is now fully invested in the market. As he said, he buys with conviction. I know a lot of you in the chat are very excited about that. But let's see what will happen. Remember, not just because that's Martyn's strategy or it's my strategy to go high risk with a short, or Martyn's strategy to go high risk with a long, doesn't mean that's the right strategy for you guys. But you can see that Martyn, when he says he's going to do something, he does something, and he is believing in these projects. Nothing has changed. So I'm going to go and continue with the top story of today, Jackson Hole. We are getting ready for the biggest event probably we've seen from Jerome Powell in maybe a year, because remember, when he comes onto these events, he has signaled pivots, he has signaled cuts, and we are expecting the same today. We've gone through what to look out for. We've just gone through some of the newsletter. We're going to continue with the newsletter, but remember, if you want the newsletter, everything we're seeing every single day, go and click on that link. There's a free version. There's an annual plan. That gives you a 1 week free trial. Go and at least check it out for a week. I'm sure by the end of the week, you will learn so much more. But let's continue with the deep dive of today's newsletter. Just to recap for everyone who's just tuned in. Firstly, make sure you hit the like button. Secondly, make sure you are subscribed. We're covering the speech live on the show. The roosters are roosting. Yes, the roosters are roosting. They're getting ready for the Jackson Hole speech as well. Just to recap, and then we'll continue. I am short. I am in quite highly leveraged short positions before I came on live on the show. Why? Well, because I think the market has priced in the good news. The market is priced in. The market is priced currently quite high. I think XRP wants to come back to the bottom of this range at $2.62. Maybe that's another 10%, 5% move towards the downside. I think Ethereum was slightly overpriced. It was actually up on the day, and I think that obviously my whole portfolio is very much in crypto and XRP, and I just want to have a hedge against it. That doesn't mean you should go short. I am obviously up on my shorts right now. We are seeing the markets come down, but I'll probably take profits either when I hear something that Jerome Powell says in the speech or potentially before. That's what I'm doing with my personal money. Then what have we gone through so far? Well, we've talked about the tradition. We've talked about what he comes on and says at these Jackson Hole events. We've talked about how last year he came on and talked about a pivot. That was the first time we really knew that they've gone from increasing rates to holding rates to actually bringing them down. So that was a significant development we've seen at Jackson Hole. We've seen him talk in the COVID era about increasing rates. This is his last one. He's not going to be reappointed, so we might expect something along the lines of talking about independence, trying to leave a legacy, trying to keep something potentially, or maybe not. We've also discussed already September rate cut expectations. Just a couple weeks ago, we were expecting an 100% chance of a rate cut in September. We were actually also pricing in a 50 basis point rate cut. Ever since PPI and over the last few days, that has been changing significantly. Once PPI data came out, and if you've forgotten about what that actually means, it's producer price PPI, producer price inflation. What we saw was that tick up quite significantly. That tick up means that tariffs are now in play for producers. The market is now considering, is that going to come into CPI, and are the consumers going to start being affected? Is that going to drive inflation up? And to combat that, they need to keep rates higher for longer. That's what the market's worried about. And that's why we're now starting to see a shift in the probability of a rate cut. Slowly but surely, it's becoming more and more unlikely that we see a rate cut in September. Still overwhelmingly likely, but we are seeing that shift. And today's speech will really change the balance for what's going to happen. Every sort of hour or so, this updates, and we are seeing the expectations of rate cuts come down slowly. Now they're popped up a couple percent, but they're quite volatile. We are still expecting a rate cut in September, and that's effectively what we're trying to hear what Jerome Powell says, because the markets are so volatile with these expectations. 100% chance a couple weeks ago, now about 70% chance. The markets don't know. Jerome Powell will give us an insight into that in this speech that's coming up live on the show. Is Stacey in the chat? I saw some people saying happy birthday, Stacey, but I don't think she's in the chat. Okay, so the decline stems from multiple factors. Yes, PPI, we've gone through all of this. And then we started speaking about the dovish and hawkish stance. I'll come on to some more information in a second. Just want to give a recap for everyone new who's joined us. The hawkish versus dovish tightrope. We've talked about the three things we're looking out for from Jerome Powell. The two main ones, and we've got a poll running in the chat, will Jerome Powell have a hawkish or dovish tone? And we discussed what to listen out for. You don't want to go into this speech blind. That's why we are live beforehand, giving you a full analysis and keeping you aware of what to look out for. The dovish pivot. If he has a dovish pivot, dovish tone, we expect him to be talking about the labour market. Remember, we've seen job revisions from the labour market, a bit bearish, unemployment slightly heading up. If he keeps talking about the labour market, the fragility, the concerns about the labour market, then that's sort of a dovish pivot, because then that really means they need to cut down interest rates. So that would be great for growth stocks, utilities, REITs, crypto markets, a dovish pivot. If we start seeing him speaking a bit more in a hawkish tone, how do we know he's speaking in a hawkish tone? Well, he'll be talking a lot about tariff-driven inflation. He'll be talking about wholesale price risk. He'll be talking about PPI moving into CPI, and he'll be concerned about inflation. If we hear him really talk about inflation and sound concerned about it, well, that's going to be hawkish, because what that means is that's his main priority, and what that would lead to is interest rates staying at the levels they are now for longer. And that will cause a correction in the markets, whether it's a long-term one or a short-term one. We will see a reaction live on that event of a correction if it's a hawkish tone. What is most probably going to happen is most of the speech is going to be pretty neutral. We're going to see some strategic ambiguity where he just talks about data dependence. That is the most likely scenario. However, I believe we will get a sense of the tone of a hawkish or dovish. Yes, most of the speech is going to probably be data. He's going to keep saying we're going to look at the data, we're going to look at CPI and PPI. But I think there will be elements of either a dovish pivot or a hawkish stance. My personal opinion, if you want to know, well, I think inflation is the bigger problem compared to unemployment. Unemployment data, yes, it is starting to give indications of it not being very strong. The labour market looks a little bit fragile now with the recent job data we got. However, it is still at a historically low level. California is looking terrible, but when you look at the general US and unemployment data, it's at historically low levels. So I don't think that's going to be a major concern for him. So I don't think he's going to be emphasizing the labour market risk too much. I think what he's going to be more concerned about is the fact that inflation is still not really under control. It's actually going back up. We've seen it above 3% now. Their target's 2%. Now we've seen PPI go up. Now we're seeing tariff-driven inflation. I think that's the bigger concern. And to combat inflation, you keep rates where they are. It's an unpopular opinion. I know 90% of you in the chat probably say Jerome Powell's too late. He needs to cut. But the economics of it is inflation. If it's too high, you keep rates where they are. You don't really want to cut rates. Or if you're going to cut rates, you cut them at a much slower pace. let me know in the chat. What's more important, jobs or inflation? Just type it into the chat, jobs or inflation, and also vote on the poll. Will Jerome Powell have a hawkish or dovish tone? We're about 52% dovish, which would mean he would be supporting lower rates, and 48% of you are saying hawkish, high interest rates for longer. Vote in the poll, but also let me know in the chat right now, what's more important, jobs or inflation? Not as a whole, not what's more important as a whole, but right now with the data we've got in front of us. Is it more important now that unemployment data is at historical lows, slightly upticking now, or is inflation the bigger issue where we're actually seeing real data? Not as a whole, because obviously the jobs market is more important as a whole because that leads to recessions if jobs data was looking really significantly bad. But right now, with the data we've got in front of us, what do you think is more important? Jobs or inflation right now? I need to stress this right now because jobs data right now is at historically low levels. I know in the grand scheme of things, jobs is obviously more important, but right now with the data we've got in front of us. But inflation, jobs by far, jobs is more important. Yeah, you people are delusional. That's not very nice, okay, Sunset. What do you mean? We don't really tolerate, everyone has different views, that's fine. It doesn't matter. We are all a family here. Please do not start saying stuff like that. Next time you might be timed out. Just be careful. We don't like animosity between people that disagree. Everyone disagrees, but at the end of the day, all opinions matter. Jobs more important, jobs for sure. Let me go to the chat and then I'm going to come on to the data mismatch and give you my thoughts again, and then we'll go live into the speech. Inflation jobs don't matter when robots inflation jobs don't matter when robots turn up. Thank you, MDL. Jobs. Sure, Wales already buy the dip. Jobs equals historically low. Inflation slightly bad. Fixed laziness, fixed jobs. Powell can't fix that. With the uncertainty of tariffs, why would he cut? Yeah, maybe that's a good question. Okay, Sunset, you've only been timed out for 60 seconds. We'd like to give a few warnings just for that, but you're not banned. You've been timed. Thank you, Mike, for taking care of that. Inflation is now because jobs are going down due to AI. Yeah, I mean, a lot, especially in California, what we're seeing is those software engineer jobs are heading down, and we're just getting sort of expected anyway. Anyway, you keep letting me know in the chat, and I will. My shorts are flying. I am also. Oh, wow. Let's check on the short positions. Is it time to close? Has anything... Oh, I think one of them has already been closed. What has been closed? Part of the Ethereum position I think has been closed. So far, up 86% and 20% on the XRP short, 86% on the Ethereum short. Keeping you updated with that. Look, I'm not a bear. I do think the bull market will continue. I still think XRP will go to $8 to $12. I'm just trying to hedge my position. So let me go back into getting ready for the speech. If you haven't got the newsletter yet, there's 900 people watching. I'm sure there'll be a few of you that are paying for lots of news subscriptions. So, I'm sure there'll be some of you that want the real news in front of you every single day, so you learn to trade, so you learn what your stock's all about, so you learn what's going on in the macro environment, so you just understand a bit more about the market, so you can make more informed decision. If that applies to any of you in the chat, here is the link. The best newsletter out there, in my opinion. You get the stories that matter to you straight into your inbox every single day. Or if you don't want it in your inbox, you can turn that notification off. You can get it in the app. You can listen to it. You can go on the website. There is the newsletter link. Gives you a 1 week free trial. There's also even a free version. And also it gets you entered into the $1,000 XRP giveaway, which I'll give you the link for now. But I promise in 30 seconds we're going to get back to analysis. So here is the link to the XRP giveaway. Actually, I'll wait for you guys to sign up to that newsletter, then I'll give you that link to that. So the newsletter link is in the live chat. It's also the first link in the description. Once you've done that, let me know, and then I'll give you the link for the $1,000 giveaway. I don't want to give you 50 links at once, one at a time. There is the newsletter, and then also I'll give you how to validate those tickets in a second. But before we get on to that, let's continue with the story ahead. So the data mismatch, labour market resilience versus inflation persistence. Remember the two big issues, labour market, inflation. Which one's more important? The unemployment rate at 4.2% remains historically low, but job creation has stalled. At the same time, tariffs are pushing up consumer prices, with core goods inflation showing acceleration. Goldman Sachs economist David Merkel notes that weak jobs growth may push the Fed towards cuts, but wholesale price jumps and tariffs complicate that calculus. So remember, unemployment rate is at historically low levels. Inflation really sort of isn't at near the target. But the issue is jobs creation is stalling. Tariffs are pushing up consumer prices. We've seen that within clothing, goods, stuff like that. We've started to see it in CPI. Now we're starting to see it more in PPI, which we're worried will come into CPI. Legacy consideration. As Powell's presumed farewells address, remember this is his last Jackson Hole event, the speech carries symbolic weight. His tenure has spanned COVID, inflation spikes, and political clashes. He is expected to use the Fed's framework review to signal a shift back towards a more traditional preemptive policy after failures of average inflation targeting. This is another option. He might spend the time of this speech to say, I've come up with a better way to combat inflation. We don't like this old-fashioned way of doing it. We've got a more traditional preemptive policy measure that we want to start implementing in the future. We've learned so much from this COVID, we've learned so much from tariffs that what we're going to do is start implementing a new policy. He might do that as a legacy sort of thing in this speech. That might also come up. So that's a scenario as well. Fed independence under fire. Again, these are some short points of what else might happen. So obviously the dovish, the hawkish, the neutrality, the legacy, and also the Fed independence. So Trump has pressured Powell to resign and threatened legal action. Powell may use this stage to reassert the Fed's independence, a crucial message in a election year. So that's what he might do as well. Valuation context. The S&P 500 trades at 22.3x forward earnings, 95th percentile historically. Elevated valuations mean little margin for disappointment. The markets right now are so high. They're up 40% since the tariff lows. The cryptocurrency market is I mean, we've seen XRP go from 40 cents to $3.50 or 30 cents. The markets are historically high, and when you look at the S&P 500, it's at 22.5 forwards earnings. It's in the 95th percentile. We are pricing in a pretty good speech. We're pricing in pretty good monetary policy. We're pricing in nothing crazy happens in the market. So that's why, if anything is a little bit out of line, if Jerome Powell's is a bit more hawkish than we are expecting, then there is room towards the downside. That's why I'm hedging my position with a short position on a couple cryptocurrencies. Did you guys sign up? Where is the Powell? When will Powell talk? He'll talk live on the channel. You won't miss it. I think it's in 1.5 hours, I think, is the official time, but we've got the build up live on the channel. There's no point just listening to him talk and not understanding what he's going to say. Stagflation, yep. Sensei and senpai, what's the difference? Sensei is the teacher, senpai is like the assistant teacher. Appreciate you, sensible sensei. Thank you very much. Okay. Okay, cool. So the valuation context, we've talked about that. That's why I'm short. Analyst perspectives. BNP Paribas. Powell unlikely to pre-commit without August payrolls. These are some quotes from analysts. We've got Glenn Mead. Powell may acknowledge weakening data without locking into cuts. Deutsche Bank says, expect emphasis on long work framework reform. Deutsche Bank is saying Jerome Powell is probably going to come out and talk about some new ways to control inflation and what they've learned and some sort of reform. That is one of the scenarios. That might be what the speech is dedicated to. I don't think so. I think it's certainly going to touch on either the jobs market or the inflation market, probably both of them. So this is how I personally expect the speech to go. I think potentially he talks about this long-term framework reform, where he talks about a new way of looking at inflation and a new framework you might want to put into action before he leaves. he might dedicate some of the time of the speech to that. I think he's going to talk about the jobs data and say it's not brilliant, it's not brilliant. It's jobs are being created at a much lower rate than we want, and AI is taking jobs away. However, we are still at historically low levels. We're not too worried about it at this moment in time. Unemployment's at 4.2%, historically low levels. So he'll talk about the emphasis on the long-term framework reform. He'll talk about the jobs data, but not really focus on it too much. And then he'll talk about inflation. He'll talk about the fact that tariff inflation is now coming into effect. We haven't seen this before. We need to be prepared for this. And whichever one he talks about more, whether it's the jobs data or the inflation data, that's what's going to cause the markets to go up and down. So remember, I'll tell you again, I'm sorry, this is my third time lucky. He's going to talk about a long-term framework reform where he talks about a new system to combat inflation. He's going to talk about jobs data, but he's not going to be too concerned about it. He's going to say it's at historically low levels. He's going to talk about data-driven. A lot of it's going to be, we're going to be data-driven. We're going to be data-driven. I'm not going to come out and tell you if we're going to have rate cuts or not in September. He's not going to tell us if there's going to be rate cuts or not in September. And then he'll go on to say something about inflation and tariffs are concerning. So from all of that, the long-term framework reform is not going to move the market. Him talking about August payrolls and say it's not too big of an issue is not really going to move the market. In fact, it might move the market down because that means less rate cuts. He's going to talk about the independence of the Fed, not going to move the market. If he talks about data-driven, he's going to be very data-driven, it's not going to move the market. If he talks about inflation and how bad the tariffs are, or they need to combat, that's the main priority right now, inflation and tariffs, then that's going to bring the market down. And I think that's the way it's going to go today. I might be wrong. I'm probably going to be wrong. I mean, who can predict this sort of thing? But that's how I personally expect it to go. Bitcoin just broke lower. Great for my short, but not great for the rest of my portfolio. Yeah, here we go. Ethereum was up 2% today. I didn't like the look of it. I didn't like the fact that it was up on such on no news yet. We're waiting. Wow, yeah. Now we're coming down. This is what I'm talking about. What I was talking about being uncertain before the event. This can all pop back up by the end of the event as well. But coming on to the last bit of the newsletter. So the investment takeaways is, as a general rule of thumb, again, it's not financial advice, diversify portfolio given policy and valuation risk. Rate sensitive sectors face binary outcomes. Dollar direction hinges on Powell's tone. Volatility expected regardless of clarity. Framework shift could matter more than near-term cuts. So I've given you my thoughts. As always, be prepared for the upside. Be prepared for the downside. Be prepared for the sideways action. This will have a after analysis as well. Martyn will be covering it live. I'll go live after to give you my thoughts on afterwards. I'll probably have closed my short positions by the time the Fed stops speaking. I might be out of the money. I might be in the money. To me, it's just a hedge. Martyn's just giving us the link. When is he going live? In 7 minutes time. So we'll send you straight to him when he's live. I'm not. If you're expecting me to tell you exactly what to do before the speech, well, if you voted that he's going to be dovish and he's going to support lower rates, then in theory the market will go up. If you voted and say that he's going to be hawkish and he's going to be supportive or keeping interest rates higher for longer, then in theory the market's going to go down. In theory, I mean, there's little bits that can change that around, but in theory that's what's going to happen. So you need to think about your own portfolio. Are you prepared for the downside? Are you prepared for the upside? Are you prepared for the sideways action? If you are, then you're in the right position. If you're going to be scared if it goes down and you're going to be liquidating, then you're not in the right position. If you're going to be scared if it goes up and you're not in, then you're not in the right situation. If you can't handle the markets going sideways for another year, you're not in the right situation. If you're not ready for a crypto bull run and an altcoin season, you're not in the right situation. If you can't handle a bear market and an 80% drop, you're not in the right position. And I'll give you my final percentage charts of all of this to happen, but stay where you are, because even after I give you that, we're going to go into the main event with the live speech with Martyn. So I'm going to answer some questions, but I'm going to give you actually something more important as well. This is from yesterday's deep dive. Actually, what I'm going to do, if you want $1,000 worth of XRP, we're doing a giveaway because it's a 100,000 subscriber special. Here is the link. $1,000 worth of XRP. All you have to do, it's live, done free to enter, free for all, no pay gaps, no paywalls. Tanking badly. Are we down more? No, we're recovering a little bit right now. So it's free for everyone. This is not like the fake giveaways on X. This is real life giveaways live on the channel, are real money. We're going to give it to you in XRP. You decide what you want to do with it. Put it in USDT, put it into Bitcoin, sell it for cash, go on holiday. You decide what you do with it. This is the main giveaway of our $100,000 subscriber special. You click on that link. It will take you to this link over here. What you have to do is sign up. So you sign in actually with an email and your date of birth, as long as you're above 18. There will be something over here, log in. Then once you've logged in, you see all of this. It might seem complicated at first, but it's actually the most simple way to enter a giveaway. You can have as little or as many tickets as you like. The more tickets you have, the more likely you are, the higher chance you have to win. You can win with just one ticket. All you have to do is go repost that on Martyn's X. You get 500 tickets. Go and subscribe for the Substack newsletter that we run. Get 150 tickets. All you have to do is the free one, the free trial, whatever. Even if you already follow Martyn on X, even if you already follow me on the newsletter or subscribe to the newsletter, even if you already follow Vaz on X, you don't need to unfollow and do it again. All you have to do is click this button and claim your tickets. It's $1,000 worth of XRP live giveaway happening in 24 days to celebrate 100,000 subscribers. Hopefully we'll be there soon. So make sure you are subscribed. Make sure you go and check out the giveaway because it's all happening live on the show. And it's free to enter. Bitcoin has just been bought up pretty heavily just there. I mean, that was incredible. Just watch that happen live, 0.3% in literally seconds. But I want to give you one more piece of news from the newsletter yesterday, the deep dive from the newsletter yesterday. And this is why I say you need to be subscribed to the newsletter, because we give you so much information. In the general sense, what we just spoke about there was what the Fed will do and how it's going to affect the markets in the short term. In the bigger picture, these are my thoughts on what the risks are and the potential Fed reaction. I'm just checking. Martyn will be live in about 3.5 minutes. Let me make sure. Has everyone hit the like button already? Please do that. So let's see if we can get the likes up. So these are the risks and what the Fed would do. This is a bigger picture. If the risks, these are some of the risks. Persistent tariff inflation. If that happens, how do we know that's happening? Well, you see core goods inflation above 0.3% monthly. You see it coming from PPI into CPI. What would the Fed do? Well, the Fed would extend the pause and raise the terminal rate expectations. Keep rates higher for longer. If the labour market collapses, unemployment goes up above 4.5%, payrolls are less than 0 for 2+ months, then we might see an emergency rate cut. Again, an emergency rate cut is not always the best thing. It means the market's collapsing or the labour market's collapsing. These are some more of the risks and some more of what you need to look at. So you can screenshot this, you can go and see it on the newsletter. But the big thing I want to talk to you about is my personal predictions, what I'm assigning probabilities to. So the base case, what I think is going to happen, and this is why I still think there's going to be a crypto bull run. I think the ETFs that will get approved in October, XRP, Solana, Litecoin, Avalanche, that will get approved in October will lead to an altcoin season. It's a bit lower than I first had at the beginning of the year, but the base case is 60% probability. That's my personal probabilities, while also getting analysts' opinions on this. What does that entail? Well, it entails 2 to 3 cuts by the end of the year. We're still pricing it about 2 to 3 cuts. We expect that would mean that the 2-year bond, the 2-year yield falls to 3.2 to 3.5. The 10-year drops to 3.7 to 4%. The dollar index weakens modestly. Equities, growth stocks like tech outperform. Financial banks may be pressured as their lending margins shrink. So that will be crypto bull run. Stocks continue going up. Crypto will be supported by a risk on sentiment. This is called the soft landing scenario. The Fed cuts slowly, inflation eases, and liquidity improves. Expect tech and growth stocks to benefit, bond prices to rise, and crypto to find support. That's the base case, not the best case. The base case, 60% probability, bull market continues, soft landing. Now I give a 25% chance to an upside inflation situation, where 2-year yields rise above 4%, 10-year yield moves towards 4.75%, tariff stick expectations unanchor, equities actually, the energy, commodities, industrials outperform, so that would be something like oil, gold, silver, energy stocks, commodity stocks, they'll outperform the general market. The growth stocks will struggle under higher rates because they'll be kept higher. And the credit spreads widen, making it harder for weaker firms to borrow. We'll see a lot of bankruptcies. In fact, we've started to see record bankruptcies this month. Anyway, crypto faces risk-off headwind. We'll be in a risk-off environment. Growth stocks, crypto, sort of the end of the bull market, and there's a 25% chance of that, and that will be caused by upside inflation. This is the sticky inflation risk. Tariff push prices higher, forcing the Fed to keep rates elevated. That hurts tech/growth names and risk assets, but the value and commodity stocks could shine. Cash and strong balance sheets matter here. And then there's a 15% probability of downside growth. This is the jobs collapse. So what you see is yields come down, the dollar index weakens sharply. You'll see equity. What will perform well is the defensives, utilities, healthcare, staples outperform. Small caps underperform due to sensitivity to the cycle. High yield spreads blow out as investors demand higher compensation for risk, and crypto will likely sell off as it's risk off, but then it will benefit from the Fed's easing. So you'll have a large sell off, potentially a recession, and then once the Fed starts printing money, that's when we might go into bull market again. And this scenario is the hard landing scenario. If jobs collapse, the Fed will cut aggressively. This is when you see emergency rate cuts. Stocks crash in the short term, but you normally see a V-shaped recovery. Safe haven assets like treasury, defense stocks, gold do well initially. Riskier credit and small caps suffer. Crypto may fall first, but could rebound if easy money flows return. Remember, crypto will crash hard and fast first, and then recover first as well. But that's the downside growth scenario, 15% probability, jobs collapse. This is the 25% probability of tariff stick, and this is the base case of why I think the bull market will continue. And as you can see with my probabilities, I'm assigning a higher probability that the tariff is the bigger issue, the inflation is the bigger issue, and that's why I expect Jerome Powell's speech to be more focused on inflation. I think we've got Martyn going live just now, so thank you everyone for tuning in. If you want newsletters like this every single day, we didn't even go through half of it. You had my whole XRP chart in today's newsletter. You had another chart in yesterday's newsletter. You can go back and look at all the charts, all the deep dives, all the top stories. Bullish is on there. The stock Bullish, Nvidia, everything like that is on the newsletter. Here is the link. We're going to go straight to Martyn, who's going to be... here is the link. Everyone go and sign up for the newsletter. If you want the news, you can grab it on the newsletter. So, get ready for it. Don't panic. Don't take this as financial advice. Please be careful. But we'll go through it together. We'll be covering the speech live. And where we're going to be covering it, well, I'm going to give you the link to it. This is where we're going now, over to Martyn's studio. Same channel, different studio, different location. This is where we're going. Martyn's live right now. He'll be covering Jerome Powell's speech. I'll see everyone there. I'll end the stream. Go and sign up to a newsletter in the meantime. But thank you everyone for tuning in. I'm live every single day. We're live for all major events. Make sure you have subscribed before you have left so you don't miss us again when we cover these major events. Thank you everyone for tuning in. Go straight over to Martyn. Either click that link. Obviously, that's the newsletter link. Go and do the newsletter. The link below that is where we're going right now. Martyn's live there. I'll go join you there. Same channel. He'll be covering the speech live. If not, if you stay exactly where you are in 30 seconds to a minute, you'll be redirected to Martyn's stream. Hope you enjoyed today's stream. We're live every single day. We'll be live again next week. I do have a Sunday show as well in the evening, depending where you are. Keep an eye out for that. But every single trading morning, we're live as well. So subscribe, hit the bell, and I'll see you on Martyn's stream. He's live right now. Until next time, take care of yourselves and each other. Bye-bye.